Hello everyone, welcome to the Ichimoku daily analysis for the US dollar FX futures for Monday, July the 25th, 2011. Now the candle that we're analysing here is the second last candle that appears on the chart. The last candle is the new 24-hour period that's trading, so we disregard that candle. It's only been trading for a very small amount of time. But analysing the final candle, the second last candle here, we have a candle that has failed to continue the trend to the downside for the second trading day in a row. Previous day's trading, we had a candle that failed to make a lower high and a lower low. Today's trading, once again, we've failed to make a lower high and a lower low. Having said that, however, the trend remains down, so we haven't had a change of trend to the downside. We had this very large downside momentum day, a very large red-bodied candle that broke out below the cloud and gave us a bearish signal in Ichimoku charts terms by breaking out down below the cloud in a very bearish way. Previous two candles have seen the market fail to go on with the move, so we have had a loss of momentum from the bears to the downside. It's little wonder that we did see that loss of momentum, however, because it was a very big day for the market, a very volatile day, and quite often markets need to relax for a period of time before the trend continues on its way. So there is still a very good chance that the market will continue to the downside. The lack of commitment to the upside is quite important. We've seen in the last two trading days how the market has tested 74.50, and we've seen the buyers lose commitment, and that's evidenced by the shadows on the top. They've tested up around that level. On the Friday's trading, the market tested above there and sold off. Today's trading, we've tested to that 74.50 level, and the market sold off. Now, we do have green-bodied candles too. So on the day between the open and the close, the bulls have actually made net bullish progress. So that could be fairly important for a potential change of trend to the upside. Just looking at areas of support, we do have support offered down around the low of this major red body candle where the market sold off significantly at 74.12.5. So that's a very big level, and the previous two trading days tested down to that level and failed to close down below there, so that's fairly significant. Good support down at 73.93.5, roughly 74, and at the 73.72.5 level at this swing low. Down below there isn't a lot of support until the market trades down to 72.86, so we do need to watch that region. If we do see a bearish close down below 73.72.5, we could fairly quickly see the market testing down to 72.86. Now, in Ichimoku charts terms, the market is trading below the clouds, so the market maintains its overall negative bias that began when we saw the market break out 3 trading days ago with this bearish breakout. The market is also trading down below the Kijun-sen and Tenkan-sen, so that means that the market is bearish in the medium-term and fast-term time frames by trading down below this pink line and the green line here. The Tenkan-sen is pointing down fairly sharply, and that's reflecting the strong downside momentum that we've seen in this market over the previous few days. There is a little bit of lag here, so this loss of momentum to the downside hasn't been reflected in the Tenkan-sen at the moment. Looking at the Kijun-sen, the pink line, we've seen the Kijun-sen turn flat, and as we know, when the Kijun-sen turns flat, there's a good chance of the market retracing back towards there. So in the previous two trading days, we've seen the market attempting to retrace back towards there with the shadows on the top of these candles, but we're finding resistance at the 74.50 level. So that's a very important level if the market is going to trade higher. We do have solid support up above there at the cloud, which is trading around 74, and that extends all the way up through to above 75, roughly about 75.16. And also we have resistance at the Tenkan-sen at 75.12. Now we did have a crossover of the Tenkan-sen below the Kijun-sen, and that's a bearish signal in Ichimoku charts terms as well, and that occurred for today's trading. But that occurred up above the cloud, so it is only a fairly weak signal, but combined with the bearish breakout a few days ago, it does tend to suggest that we may see the market test below this low of this large red-bodied candle and test to lower levels. Looking at the Chica span here, that's this orange line here, that is trading below the corresponding price action. So that is confirming the overall bearishness that we're seeing in this market. So obviously for the next trading day, the area of support down around 74.12.5 is very important for a test to lower levels, but certainly 74.50 resistance that's held for the previous two trading days is an important upside barrier.